All attendees are in listen-only mode.
Welcome, everyone. My name is Tracy Fitzpatrick, and I'll be your moderator today. Thank you so much for joining us here at Netcom Learning, a market leader in promoting lifelong learning, training, and talent development solutions. We are very excited to host today's webinar, What Does Project Management Initiation Mean? And presenting today's topic is Al Howard. Mr. Howard is an ITIL certified expert with over 37 years of experience in project, program, and product management, as well as training, curriculum development, trouble project revitalization, new product launches, and marketing and support. He has done documentation, process development for organizations, operational, tactical, and strategic objectives. And he has conducted company on-site trainings in ITIL V3 fundamentals. Now, please bear in mind that this is an overview of a very robust topic. We offer a collection of technical and business courses that can be tailored towards your specific requirements. If you are interested in a further discussion, you can make an appointment with our learning consultants through our website at netcomlearning.com. Today's session is also being recorded, so you'll get free access to the recording in the next 24 hours via email. Netcom Learning builds innovative learning organizations in the workplace by structuring a smarter workforce, supporting changes, and driving growth. We offer over 2,000 IT, business, and soft skills courses available to organizations around the world, encompassing technologies like big data, cloud, and mobility. Since 1988, we have been empowering organizations with our managed learning services to reach optimal performance results and addressing challenges. So why should you attend today's webinar? With the right knowledge of project management initiation, you can not just move ahead with your projects in terms of better outputs, but also for timely completion while saving resources and finance. PMI, or project management initiation, is the first phase of project management lifecycle. This being a crucial stage, if approached with the right knowledge and skills, can lead to a smoother and timely completion of your projects. And now I'll just give you a quick overview of the logistics before we get started. To begin with, you do have the option to adjust the window size to your liking. Simply hit the escape key and find the zoom button on the top left corner of your GoToWebinar viewer. Everyone has been muted except for our presenters. Please feel free to submit any questions that you do have for the presenters here in the questions pane, and we will address them at the end of the session. A PDF copy of today's slides are also in the handout section of the GoToWebinar viewer. And now in just a few moments, I will be passing this over to Al, who will be presenting today's topic. Okay, go ahead, Al, you are live.
I just wanted to check and unmute my screen. Everybody hear me out there? Does anybody hear me out there?
You are good.
Okay, good. Wasn't particularly sure. I don't get, just so you know, Trace, I don't get audio feedback on my hearing, so I'm assuming that if somebody speaks to me, I'll catch it. Okay.
Copy.
Okay, good. Let me go through. This shouldn't be very long, be a little bit less than an hour. Quickie on myself. My name's Al Howard, PMP V3 expert. Have been a PMP since 2000. Have presented for PMI internationally, USA, Scotland, regional meetings and chapter meetings. Do a little bit of editing. I do translation mainly from UK English to US English. So when European individuals write courses and or books, I tend to get involved in the editing of that process, just so you know. If I occasionally go silent for a second, I apologize. I've got a little bit of a frog this morning. For your information, jot this down if you would like to. Anytime I do a webinar or a presentation, anytime in the next 6 months, if a question comes up, shoot me an email, give me a call. I'd be more than happy to support you and answer questions for you. If there's additional training you want, go back to Netcom, okay? Because those I will probably forward to Netcom normally anyhow. Now, in project initiation, which really says, okay, how do we get an overview of what's going on? On the examination, should you get to the point of taking the PMP examination, anything that talks about rough order of magnitude or high level, those tend to be referring back to initiation, because initiation doesn't capture a lot of detail. It captures a lot of overflow information. Two pieces to initiation. The first is the charter, and the second is stakeholder identification. Okay. Within the charter, we'll talk about the statement of work, about who the participants are, where ownership resides. We'll talk a little bit about the business case because most companies on projects, unless you are in the business of managing and or creating and or closing projects for companies as a business of project management, the company looks at the financial aspects of it. If you hire me to do a project for you, I don't have to do a business case. I give you a quote, you say yay or nay, and we go forward. Within companies, they need, and more this is the case, they need to understand that their investments in dollars and cents will return to them more than they invest. They're not going to go out and throw money away, not in today's environment especially. Maybe years before we did a lot of experimenting, a lot of playing with business cases. Now they're pretty strict. And we'll talk about some of the measurements of business case so you have an overall. Just remember, this 1 hour presentation is in initiation to project initiation, okay? It's not the in-depth consideration, okay? Stakeholders, we'll talk about identification of stakeholders. We'll talk about managing expectations, okay? The Project Management Institute has a formal statement that says this is what a project charter is. I don't like to read slides, okay, but let me try to go through this one. A document issued by the project sponsor that formally authorizes the existence of a project and provides the project manager with the authority to apply organizational resources to project activity. Overview. Let's talk a little bit about the charter itself. The charter is used for companies to look at projects and look at work coming down the road and make a business decision as to whether it makes any sense to go forward or not. Right? It does allow for the funding of the project and again, remember the project charter is front end very high level. So the project charter may say, oh, this is $1 million project, and that's what they're looking at. They won't know the details. They may cap it at mill, but they don't know the details of the cost of the project till they get into planning, till the project is established, project manager name, and they get into the planning aspects where they define those details. Not a lot of detail at this level, okay? Now, when a project manager is selected or appointed or anointed, whatever terms your organization use, okay, that signifies the formal start of the project. Project managers are not assigned to projects until the project has been approved. So that says the charter is finished, the approvals are all in place for the funding to be allocated to the project, and we now pick a project manager, and that signifies the beginning of the project. There is no project until the project manager is appointed, period. That's a Project Management Institute definition, okay? And the charter is really overall, what are we going to do? Why are we going to do it? And does it make sense for us to do it? Now, within the charter, I'm kind of going to split about 3 pieces of it out. Okay, we'll talk about participants. We'll talk about the contents, detailed contents of the charter, and we'll talk about the approval cycle. And again, I'm going to give you an overview on these. This does not mean that within your organization, they will do it exactly this way. Organizations tend to put their own rules and guidelines in place, but this is a reasonable overview. So for participants, there's a sponsor, could be called an initiator, normally called a sponsor. There's someone in finances involved, because finance has programs that most of us in a normal day-to-day business don't get involved in the financial aspects of it, except when we put our budget in place and what ground rules we have to follow during the project. But the overall financial aspects of the business are normally held pretty closely to the business. There are customers. There could be internal customers. There could be external customers. Now, be careful with internal and external. In this context, I'm going to want to say a customer is external to the business. It is external maybe to your organization. If you are part of a project management office, and or let's say you're assigned to IT as a project manager, anything outside of IT would be external to you. Okay, just so you know, internal versus external. And I need to explain this, because if you ever get to the point of going to take the PMP exam, external is anything outside the project. Okay, so for this presentation, it sits outside the organization you're in. For the exam, should you ever get to that point, it's external to the project. Okay. There could be subject matter experts. There could be technical experts. There could be project experts. Let's give you an example. A project manager is asked to contribute to the charter. And so the project manager goes and works on a charter, and he spends a week or two or a month or whatever is involved in what's required for the project manager on a charter. Now, he or she is not working on a project. Just so you know, from a purist technical standpoint, the project does not start until a project manager is assigned and the project is approved. If you're working on a charter, the project is not yet approved. Okay, so you are doing project management work, but you are not working on a project, just, you know, from a technical standpoint. Okay. The statement of work is an extremely high-level document. It talks about, is this a, let me just check something quickly. Sorry about that. I want to talk about the statement of work, about selection processes, a little bit about agreements, enterprise factors. What is there about your organization that is unique and or different? If you're doing project management with a pharmaceutical industry versus a construction industry versus pure IT, they are really different project management skills involved. Okay, and not just because of subject matter, because those three in particular do things very, very different than each other. Okay, so enterprise factor, skills and knowledge, and the potential project manager, who in fact the potential project manager is. Now, statement of work. Two sides to the statement of work. The first is that someone gives us a statement of work that says, hey, we're going to do an accounts receivable project. We're going to do an onboarding project. We're going to do a construction project, update project, a modification project. We're going to put new PCs out there. That's the level that the charter would contain. The charter is not going to contain a lot of detail. Generally, charters are never changed from the start of the the release of the charter and the fact that a project gets started and a project manager is assigned, we never go back and change the charter. It is at such a high level, there's no details, so there's nothing to change. Okay, absolutely minimum number of details. Now, this particular statement of work is created by the person requesting the project. Now, this says again internal and external. Let me qualify that just a little bit. Think of this in terms of you are in IT and the sponsor may or may not be in IT, and somebody from manufacturing comes to you and says, "Oh, we have a project we're thinking about," and they go to do the charter. That organization would produce a statement of work in general terms that says, here's what we're thinking. We're thinking about moving from a hands-on environment to a robotics environment, and we're going from individual notations by people on the line. We're going to bar graph, UPC code. So it's just overall general. Doesn't talk about implementation strategy. Doesn't talk about any of those things. It merely talks about what is it in very broad terms that I want to get accomplished. Okay. Now, those can come from outside the company. They could, if you're a third-party supporter of a project management group, you could be hired by a company and they could give you a statement of work. Okay. When they input that statement of work to the charter, whoever your sponsor is within your organization, they're going to say, okay, guys, let's take a look at this. Here's what the customer wants. Give me a yay or nay. Do we want to go do this? Is this something we want to accept? Is this something we think we can do? Okay. Very, very important. Now, there are times, and I think I may say it again later, there are times when you have to say no. I know. You may consider this as a career limiting comment. Not necessarily so. It is better to tell management and the sponsor that it's not possible to do what they're asking for, either within the dollar limits or within the time frame, within the technical expertise within your organization, whatever the reason is. Then it is to say, yes, we can do it, and at the end not be able to deliver it. Okay. Much better to address that up front. It's better to have the customer upset because you said you wouldn't do it than it is for them to be upset because you said you could do it and you could not deliver what you promised to them. Okay. So again, this bottom comment here, 30,000 foot view, very, very high level, not a lot of detail. Okay. Now here's some terminology we'll throw out just to give you an idea. These are evaluating techniques. Hold 1 second. I apologize, that frog got to me. These are some of the ways to decide whether you want to do it. There's something called a murders. I'll talk a little bit about this. Scoring models, economic calculations, net present value, internal rate of return, benefit to cost ratios, and then the details on net present value and internal rate of return. Okay. Now, murder board. If you've never heard the term before, if you have ever been in a brainstorming session, and brainstorming session says, oh, okay, let's get a bunch of people in the room. Let's put all the ideas we have up on a board. Okay, now I tend to use Post-it notes only because it's easier to just throw them in a trash can and not worry about them as opposed to writing them on board and taking them off the board. But whatever, we have a brainstorming session. Everybody puts any idea they want up on a wall. There is no idea restricted in brainstorming. That list of things then becomes what is called a murder board. Okay, and the term murder board literally means to go through and kill those ideas that were thrown up on the board during brainstorming that make absolutely no sense and no benefit whatsoever to the conversation. Okay, that's what a murder board is. It's just the follow-on to the brainstorming session that says, which ones of these do we really want to keep, what are really valuable. Uh, some companies have scoring models, and scoring models will be this involves this level within the organization, a director, if this is requested by a director, by a VP, senior VP, uh, group vice president, and or corporate executives, there may be scoring models. You get so many points. They may look at it and say, you get so many points based on who the customer is. You get so many points for the people you are using. If you ever filed an application to go to work for the government, they have a very, very distinct scoring system. Okay. In the scoring system, you get a lot of points if you're a disabled veteran. You get points if you are a combat veteran. You get points if you are a veteran. You get points for multiple minority categories. So those are scoring models. They said you get so many points for these different things. You add up all the points and then you decide. You could be looking at 2 or 3 projects, and on a scoring system, you would look at these. You would rate every single one of the scoring items you're looking at. You would add them all up and you say, oh, this has the highest score. This is the project will do. Okay. Now, we'll come back to economic calculations. Benefit cost ratio, NPV, and IRR, we're going to talk about. Benefit to cost says I spend this much, here's what the benefit to my company is, and here's how much I'm going to spend. Those of us that have been in the IT organization have had a difficult time with this before. And part of that is because reaching over to the business side of our organizations and saying, okay, what's the value? Oh, this is going to save everybody in the business 3 minutes a day. You know what? Put a number on it. Give me a dollar value, because those 3 minutes a day are going to get eaten up by something else that may or may not be as important. Okay? What we're looking for when we talk about net present value is I need dollars and cents. And again, those of us in IT have not been very good at extracting that information from the business side. You're going to find in project initiation, when the project team is established, and we'll talk about that in a minute, when the project team is established, that we're going to have business analysts on project teams now. So it's not technical people doing things. It's now business analysts are going to be in there helping us to better understand how we add value to the business. Everything is going to come down to dollars and cents, guys. I've seen this transition over the last number of years. Okay, now we're going to talk a little bit about something called net present value and present value, and how the calculations work out, and how companies might decide which things they're really interested in. What do they really want to do? They're going to look at money spent, and they're going to look at income coming back. And they don't look at it just in terms of raw numbers. So I have a project, I'm going to spend 400,000, I'm going to make $1 million, I'm going to earn 600,000. They look at it and say, oh, what if I were to put that money in the bank? You just let that money sit in the bank. What happens over time? I earn money off of that money invested, or I could invest it any place. I earn money off of that money invested, and I earn it at a certain percent. That percentage rate is the percentage rate I might earn in the bank, or secondarily, the percentage rate I have to pay somebody for obtaining money. And over time, the value of that money diminishes. If any of you all have ever been on a fixed income, and you notice from year to year, it seems you have less buying power, that's really where they're coming from, except they have a calculation called net present value. And net present value says, oh, let me look at what it would cost me to borrow money. Now, depending who you are, as an individual, what does that go to? That goes back to your credit rating. If you have a very high credit rating, that interest rate is lower. You have a low credit rating, that interest rate is higher. Okay, So companies look at this and say, oh, well, I can borrow money at 10%. So they may say, whatever I spend or I recover is the present value in this year, and next year it will be in that year, and the following year in that year. Okay? And I'm going to take and I'm going to divide that by 1 plus this percentage number. So let's say it's 10%, just for kicks. So I can borrow money at 10%. So that divisor becomes 1.10, 1 plus 10%. Okay? And because the further out in time you go, the less your money becomes worth. Okay? They put an exponent on it. And the exponent is a number of years out. So this would be 1.10 to 0, which is the value itself, right? 1.10 to 1, 1.10 squared, trebled, quadrupled, and so on. So obviously, excuse me, obviously the further you go out in time, one sec, the further you go out in time, the higher that exponent becomes. The higher that exponent becomes, the bigger the divisor. The bigger the divisor, the lower the result. So $1,000 in this year versus this year versus this goes down in value every year. So when they do this net present value, they add up all the, wow, sorry about that, hit the, by mistake, I apologize. So you add all these things here together, okay? And that gives you a different perspective on the value of the project in dollars and cents, okay? Now I'm gonna walk you through one just as a very simple one. And this says in year 0, 1, 2, 3, 4, and 5, I had incomes of 100, 200, 100. Expense an income of 100, 200, 300, 400. With the present value percentage at 10%, the first one, the second one goes down from, in the calculation, goes down from 200 to 180. In the third year out, it goes down to 80 and 80. So now instead of my expense being 400, this is great. My expense is only 360. Income, guess what? That gets even worse, doesn't it? Okay. And the further out, remember, at year 5, look at this. At year 5, I'm at 50% here. I think I'm getting 400,000 income. I'm getting 200,000 income. So I said, oh, my expenses for my income, excuse me. Hold on. I apologize. My income's $1 million, so I'm going to make $600,000. But when they do net present value and look at the cost of, sometimes this number is called weighted cost of capital, but cost of money, this says I'm spending 360, I'm only bringing in 600. Guess what? I didn't bring in $600,000. I brought in $240,000. 600 income minus 360 expense based on net present value. Okay, so that's how this all fits together. Now, some companies look at something called internal rate of return. Okay, and based on the interest rate, if this is the profit from a project, 100, 800, 600, 400, 200, 0. Okay, and this is percentages. If I do my net present value calculation at 10%, I come up to whatever my number is. I'm just showing this as the example. So the higher my percentage rate, what happens? Let me back up for a second. The higher my, went the wrong way. The higher my percentage rate, the lower these numbers would be. Okay? So if my percentage were 11, it would be lower, 12, 13, 14, 15, whatever. Right? What happens as you increase the percentage rate, your profit gets reduced because the divisor becomes larger. Now, at some point in time, at some percentage rate, based on whatever your project is, your profit becomes zero. Now, I don't have the program that the finance people have, so my calculation may be a little bit different than their calculation. Right? They know how to get back to zero. They can hold on again 1 sec. I really apologize about this cough. Okay, so they have a program that takes it down. They know exactly to 4 decimal places at what percentage rate your profit becomes zero. Okay, so let's look at this example here. This says from the previous example, if my interest rate for my net present value calculation is 16.67%, these are what the numbers would look like. Okay, expense and income calculated based on 16.67 expense and income. Now I got to $120. I didn't get to exactly where I wanted to be because I don't have their mystical program. I just kept changing numbers and rerunning the calculation. Okay, so this one says 333, 320, 333, 200. So I'm losing 120. That's the closest zero I can get, guys. So this says at 16.6.7 cents, I have reached my internal rate of return. Internal rate of return is zero. The percentage in the calculation that brings my profit to zero. Now, some companies have established an IRR. Years back when I worked for a company and I would suggest projects and we would do all the financials, and finance would come back and say, oh, no, the IRR doesn't look good. And I would say, okay, and I would walk away because I didn't stop and say, okay, hey, you guys, can you explain to me what the internal rate of return is? Had I understood what they were looking for, I could have understood the financial aspects. Now, some companies have a number. The company I worked for was 17%. If your internal rate of return excuse me, was less than 17%, you couldn't do the job. Period. Flat rule. It wasn't a question of, oh, let's go back and recalculate or anything else. If it's less than 17%, you don't do the job. I don't care what the project is, you're not going to do it. Go find a way to make the business case look better. Shorten the time. If I shorten the time and bring the same amount of money in, what happens? Because I've shortened the time, my exponent for the calculation is a lesser number. So therefore, the result of the calculation yields higher numbers. Okay? So they may just go back and say, go back and redo. Can you do it quicker? Is there something you can do to reduce expense? Because you can't do it if it's 17% or above. Okay, so so this is the internal rate of return. Your project profitability becomes zero. Okay, and finance does this standard calculation on internal projects. I don't think that has changed for years. Now, there are some additional accounting standards. Let me just check something quickly. Okay, good. Payback period. I'm going to spend $100,000. Where do I get my 100 grand back? Okay. Now, normally, payback period is in terms of pure dollars and cents. You don't go through an NPV, net present value calculation, to look at payback period. Payback period says, my budget says I'm going to spend N number of dollars in marketing, finance, sales have said they can sell this many of them, and or the business side has said this is the value. It's pure numbers. Forget the NPV at that point in time, okay? Benefit to cost. Now, Payback period is at what point in time do I break even? Have I gotten all my money back? Everything from that point forward is profit. The benefit to cost ratio is a ratio, okay? And it's a division, okay? So what happens is you look at what's the benefit and what did it cost me? You divide one into the other, and if the benefit cost ratio is greater than 1, that's good. That says the benefits are greater than the cost. Okay? Less than 1, you're probably not going to do it. Now, there's a term called opportunity cost. And some of you may have heard it called lost opportunity. Okay? PMI tends to refer to it as opportunity. That's why that's here. But if you heard the term lost opportunity, this is really what they're talking about. They're saying, okay, I have 3 projects, and I'm going to do my calculations on all 3 of these projects, and I'm going to look at all the dollars, and I'm going to figure out what it's going to cost me and my benefits and all those things. And then I'm going to come up with payback periods, benefit cost ratios, and other contributing factors. And of those 3, I'm going to say I'm going to do 2, because 2 is the best deal. Of the remaining 2, which of those has the higher benefit to the company? That amount of money is called opportunity cost. Because I took the opportunity to select 2, the next best deal I lost is the way they calculate it. And the next best deal is what I lost. So therefore, that's called my opportunity cost, the opportunity to do the one I did. Other companies, other organizations may call that the cost of lost opportunity. I didn't do this, so I lost that. Now, some companies will even go so far as to say, oh, I'm going to do number 2, and it's got $3 million benefit to the company, and I'm not going to do, my lost opportunity cost is 1.8 mil, because I'm not going to do the second project that could have brought in 1.8 mil. Some companies will say, in order to properly gauge the benefit of the one I'm doing, subtract the one I didn't do. So instead of saying it's N number of dollars, it now becomes N number of dollars minus lost opportunity or opportunity cost. You need to understand within your organizations, okay, how they do that calculation. When finance comes to you and says, we're not going to do this because the business case doesn't measure up, stop them. Don't be dumb like I was and not go pressure them. Go ask the question, what do you mean? What are you telling me? What is the calculation you exercise so I'm not running my project? Give me some more information. Just don't throw me a bunch of acronyms out there. I need to understand, as a project manager, you need to understand the way the finance organization operates and what their drivers are. If their internal rate of return is 17%, like the company I work for was, they're not going to do it. I don't care what you do. They have an edict from senior management not to do it. Sunk cost is money already spent. Any of you have an old car that you keep saying, well, this is only another couple $100. I already got 10,000 in this thing. Another couple $100 to keep it running for another 3 months. Okay? Sunk cost is gone. If you're going to do a consideration on an investment, forget what you already spent. That has no value whatsoever in the calculation. I had an old 1975 BMW that I was restoring. And every time I spent more money on it, I said, well, I already got 8 or 10 in it. What's another couple hundred? What's another grand? Well, you know what? at some point in time, you got to say, what's the vehicle worth? It was worth about 6. Okay. I had about 10 in it. I should have I should have looked at my sunk cost when I had 4 in it and said, that's it, I'm done. Give it away. Okay. Why? Because sunk cost, it's gone. You can't get it back. It doesn't have any value to you. Okay. Types of costs we get involved with: variable. I'm producing widgets. It costs me 10 cents to produce a widget. To produce 1,000 widgets is 1,000 times 10 cents. That's a variable. Fixed is no matter how many of something I do, I have a cost, period, end of conversation. Fixed cost. You have a building you work in. That is a fixed cost. Sometimes also called indirect. Direct, you can charge directly to the project, and if there's something about it that you can apply to the project directly. Indirect is a cost that the project would incur, but you can't apply it directly to the project. You have 22 people on the project. Their cost is a direct cost. You have indirect costs. You have the cost of healthcare. You have the cost of you have matching funding for 401ks. What are the things who pays for their office space? That's an indirect. We don't charge office space by the square foot directly to projects. So those are indirect costs. So when somebody makes a guy, and don't shoot me in the foot for this number, okay? Somebody makes $50,000 a year, right? We say the project gets charged $50,000. Right? What happens is the project doesn't get charged $50,000. It gets charged $50,000 plus there's a whole bunch of indirect costs that get piled on top of it to put the price that gets charged to the project for that individual. Okay. Depreciation, pretty simple. If you buy larger pieces of hardware, generally we tend to depreciate those over time. You run a manufacturing facility, you're buying assembly line things, product things, large investment dollars. You can say, okay, I'm going to depreciate over 5 years for tax purposes. I'm going to depreciate this. It's $1 million. I'm going to take $200,000 a year. Bang, 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 bang. Okay, that's called straight line. Accelerated says, oh no, I'm going to do accelerated. The first year I'm going to take 160. The next year I'm going to take, so I'm not taking, I'm sorry, not 160 because that would be too low, okay? I'm going to take 360 the first year, some lesser number the following 4 years. So it's not the same amount all 4 or 5 years. It starts with a larger amount up front, an amount that decreases. So the last year maybe, a few $100 left, okay? Enterprise. What's your company all about? Let me see if, let me back up. Enterprise, what's your company all about? What do they do? Are there things that your company requires you to do? Does your company have flex hours? Does your company have bonus plans? Does your company give rewards out for projects that are run well? How does your company compensate their people? What kind of office space do you work in? Do you work in a cube? Or are some countries, you're required by country law as an exempt employee to have windows? Germany, by example. If you're an exempt employee, you're not an hourly employee, you must have a window by law. Okay, so those are the enterprise things we talk about. Is your company a pharmaceutical company where a lot of the projects have nothing to do with financial analysis? It's the government has said you will do ABC, and you do these projects because the government says you have to do it. You may record the information and keep track of it, so if the result of the project ever brings money in, you can apply it back to that project and say, well, the project spent $2 million, but it brought $3.5 million back in. Okay, so those are really what we talk about. Special skills, conditions. Oh, by the way, you're going to be a project manager, and you're going to work in a logistics organization. You're going to run logistics projects, and those will be in war zones. wherever the current war of choice is. You're going to be there running a logistics operation. Special conditions. How about special skills? What are the skills we need to do the project? Where do I get those skills? How do I negotiate for those skills? Who are the managers that have employees with those skills? Okay, so special skills and conditions. Those things tend to be listed in the charter because at that level of the charter, I can say, hey, I need programmers, I need engineers, I need plant floor people, I need finance people, I need procurement people. Okay, so that's the level they're talking about. Okay, when a project manager is selected, that's the form. Project's approved, project manager is named, and that's the formal start of the project. Project does not formally, you can do project work on what this project is coming up, but until it's approved and until a project manager is selected, there is no project. Okay, just so you know. Organizations have different approval processes. A lot of times it's senior executives based on the size of the project. Your company will determine your approval process. Okay. I can't say how your company works. Our company approval was based on what level of management you were. If you were a director, you could approve N number of dollars. A vice president, N number of dollars. Senior vice president, division president, group director. So there were different levels of approval. So depending upon what you were spending, and tends a lot of times to be regardless of income, it's the expenditure money. It's the cash flow issue. Okay, do we have the cash flow to support this project? So that depends, that gets approved at different levels. Your company has its own approval process. Get approval, project manager's name, project formally starts. Okay, now concurrent with that, we look at something called stakeholder identification. The charter talks about, these are high level people. Well, we're doing this for finance, and the CFO is Sarah Burns, and the senior VP we're working with out of finance is Betty Schwartz, and so we may be able to name some high level people, but we can't normally pick the low level people that are going to be involved in the project till we start going through the planning process and we start to understand the details of the project itself. Okay, so this is very high level. Okay, now the charter by definition says, okay, hey project team, you have the ability to get these resources. This says commits resources. That doesn't say it commits Charlie or Betty or Jane or Tom to the project. It just says, hey, yep, you got resources, you got money, you got office space if you need it, and you have the ability to go get people. Al, I didn't tell you I was going to give you people. I'm giving you the ability to go find people. 99% of the companies you will ever work with, this information gets to the project manager, and the project manager goes through a selection process, goes through a negotiating process with the line managers that have these skills within their organization. Okay, so that's the way we tend to operate. Let me throw something out at you because it has to do with definition. The definition of the sponsor is the individual that is required to provide resources to the project manager to ensure that the project manager can complete the project. Now, let's talk about reality. The reality is the sponsor says, hey, Al, go get some people, go get the project going. And Al goes and does that. In all truth, I go negotiate with line managers for people, availability, when I can get them to skill levels, right? In reality, if I have a problem, I'm supposed to, guys, we're project managers, We normally all go back and solve those problems ourselves to get the resources. PMI says I go back to the sponsor and tell the sponsor what the problem is, and the sponsor is required to get me that resource. Now, I have never ever in my entire life had a sponsor get me resources. Okay, so that is the rule, and that's the way it's supposed to work, guys. Reality is going to set in. You're the project manager. You're going to go get your own resources by negotiating with management. Okay. Now, the charter could tell me what are the areas I have to work in. Is it finance? Is it HR? Procurement? Are there technical skills involved? When the charter tells me about these skills, what if I don't have these skills in house? What if I just don't have these skills in house? Oh, this project is international in scope, and we're going to require logistics people and all of the countries we deal with. Where am I going to go? I don't even know where to go to do this. Okay, so when we talk about this, I may have to go to an outside Schneider or there's a company in Raleigh, North Carolina that actually has work performed, believe it or not, literally in Siberia. These people aren't in prison camps. They're actual technical workers in Siberia. So I would have to know where to go get that outside skill. So wait a minute, now I got to go procure. I've got to go outside to buy a skill from outside. Let me think about this. I guess I better go to procurement. Now, I go to procurement, and depending upon procurement's involvement, I have to know those people in procurement, don't I? I have to know at least the high-level people I go to, and they're going to shunt me or move me down to someone else at a lower level to work with on a continuing basis, more than likely. I'm not going to get the deal with the senior executive in procurement, the senior VP for procurement for the company. Our company has 400,000 employees, 450, I think. Who is in procurement, senior executive, is going to talk to a project manager doing a project? Not hardly, okay? So we need to find out the skills. We identify those skills. Then we can go back into procurement executives and say, hey guys, this is generally what the project is. This is what the charter looks like. This is what I'm going to go outside to buy. These are the things that could be piece parts. They could be modules. They could be laptops. They could be desktops. They could be anything, whatever we need. And they're going to have to tell me who within their organization can support me. Okay. The same thing through the technical aspects. Okay. Do I need somebody that's agile qualified? Do I need somebody that's a risk specialist? Do I need somebody that's a super duper project, Microsoft project and/or Primavera scheduling tools competent? Okay, and I need to get all those things together. That's that high level thing. Now, I don't know who the people are. When I get into planning, guess what? I'm going to start hanging names on that skill. Okay, so it'll become a little bit different. Now, let's talk a little bit about expectations. I'm going to run about 2 or 3 minutes, and then I'll let you all off the hook. Let's talk a little bit about stakeholder expectations. When we talk about expectations, we normally think about customers. Here's the people paying the bills. We normally think, what does the customer expect? What do I have to get from information from them to define in detail what the project's about? Who are the users that are going to be using this product? Do I need to get some of them involved? Are there executives that I have to satisfy? Are there executives that are just looking in on a project, don't really care about it, not in favor of a plus or minus? Okay, who are they? How do I have to deal with them? I have a sponsor. I have to understand the sponsor's customer expectations. I sit down and say, okay, guys, let's write down everything you want. Let's talk about everything you need and everything you want, and let's go from there, and I will help you put it together. And we'll build this great big diagram that talks about everything you want in this project. It's not rocket science. It is not easy, but there's a processes involved to extract information, like pulling teeth from customers and users. Okay. Now, let's talk about the project team. I don't know how many times I have asked a project manager, what does your project team think? What do they expect of you? What do you mean? I told them what their job is. No. What do they expect of you as the project manager? Okay? I'm putting a team together here. I have people that I'm expecting to perform and do work for me. Okay, project managers, in your kickoff meeting, one of the things you ask is, okay, team, what do you expect of me as the project manager? What are the things that I can do to make your job? What are your expectations? If I don't understand your expectations as the team lead, as the project manager, how can you do a good job? I better understand. When I look at expectations, customers, users, executive sponsors, project team, I got two I'm really concerned about. That's the bottom and the top one, project team and the customers. I want to make sure the team has everything they need to do their job, and I need to understand what the customer wants, what they expect of me. Now, this is identify their expectations. You have to remember there are times you will have to tell the customer and or executive sponsors, whoever, that you cannot meet their expectations. Better to tell them up front than tell them when you get done you couldn't do the job. That's resetting. Document them. What can we do, what we cannot do? Being able to say no. Not easy to tell your sponsor and or your senior VP and or your direct manager, I cannot do that, and here's why. And here's some options I'll give you that may not get 100% of what you want, but I can get you 92%. Okay, we're not going to just say no and walk away. That's dumb. Okay, we're going to give them some options that they can exercise. But if we can't do the job, we have to say no. Period. End of conversation. That's an absolute positive. Don't ever lead your stakeholders on. Really not good business. Besides being unethical, that's really not good business sense. Wow. What did we cover, guys? I may have gone too fast. Being from I live in South Carolina, but I grew up elsewhere, so I haven't adapted to laid back South Carolina attitudes yet. So if I went too fast, I apologize. I'm sure they're tracking questions for you. We covered statement of work, participants, ownership, the business case, talked about the financials, talked about net present value, talked about how money gets reduced in value out in time because of that year exponent on that calculation. We talked about stakeholders, identifying and managing the key thing here, we talk about managing expectations. You better understand before you try to manage expectations. A lot of times we'll get in and try to tell them what we're going to do. We try to set their expectations for them. We get done and they still have their base expectations left, guys. Okay? Wow. I think somebody else will take over now, and I'm going to mute myself.
Great. Thank you so much, Al. That was very informative, and we want to remind our attendees that Netcom Learning is offering a comprehensive portfolio of PMI training options, which you can see the list on your screen, so check those out. I'm sure you'll find those very insightful. And technical skills are necessary to empower your career, but do you need to improve or upgrade your leadership skills as well to accelerate your career? Along with your technical abilities, develop the skills you need to manage yourself, others, and business better. Welcome to Starter Learning, a collaborative knowledge platform bringing the world's best business and leadership insights from Fortune 1000 leaders, best-selling authors, and Ivy League professors. Further, if you are interested in learning from the top American leaders, please log on to our e-learning platform, starterlearning.com, and avail the promotion meant for first-time users. Use your coupon code SARTER10 and begin your leadership journey right now. We are going to launch a quick poll before we say goodbye, so just take a few minutes to fill that out before you sign off from today's webinar. In addition, we have a lot more informative webinars coming up, so please go to netcomlearning.com/webinars in order to register. And don't forget to like and follow us on our social media pages to get the latest technology updates. You can refer to the GoToWebinar chat window for our links on Facebook, LinkedIn, Twitter, and Google+. And we are out of time, so thank you, Al, and thank you all for joining us today. If you do come up with any additional questions, feel free to send them to webinar@netcomlearning.com at any time. We hope that you found today's webinar informative, and we look forward to seeing you back here with us soon. Feel free to tell your friends and colleagues about our webinars and other courses. Have a great day, everyone.